Good morning. Good Friday morning to everybody. How's everyone doing today? Hope it's nice and sunny. It is here in Muskoka, Ontario. It is gorgeous outside. The sun's out. Beautiful, clear blue skies. How you guys doing? Good? Good morning. Good morning. Look at that gold rally. Beautiful, isn't it? Are we surprised? Not really. Not really. We knew with great certainty that we were going to get a rally. We were going to get that formation forming, that the institutions would come in and start to build up that momentum to the upside. So now that is exactly what we are seeing. So beautiful, beautiful, beautiful. So did you guys have any charts you wanted to take a look at? I'm going to have to keep us on a schedule today because we have a class right after this one, level 3 class. So I'll have to exit and get into that session with level 3 students where we will go into the markets in a lot more deeper and examine what sequences are in play in the markets and what we could be expecting. Yeah, big moves in gold. Really, really nice moves here. So let's bring up my drawing tool. So we got a really nice rally here. Really, really strong rally here. And so if we just examine this daily chart like this, okay? I want you to pay attention to these areas of supply that we have mapped out, okay? Now, these areas of supply were created as price was heading in what direction? Down, okay? Price was heading down when these areas of supply were being created. And that was to facilitate a move down into this area here where the institutions had demand. And so as you can see, now that the institutions are filling in that demand here and here, now what are they doing? They're removing multiple areas of supply. That logically, you have to come to the conclusion that if price was going to continue further downward on the chart, they would be using these areas of supply to facilitate that move down, okay? But since they're not using those areas of supply to facilitate a move lower, then what do you think is the next logical conclusion? Probably head even higher. Well, that is what we suspect as well, okay? So, you know, we were looking at the euro, we were looking at the dollar, we were looking at a few other pairs over this past week, and we have been talking about how the phase that's taking place in the markets right now is one where the institutions seem to be preparing to create a structure that will support a bigger move in that direction. Euro, we're seeing a very good sign that they're potentially creating an upward trend on the daily chart, and we believe that that upward trend will be to help facilitate a move even higher. So with that being said, with this wonderful move that we're seeing here at the end of the week, we can safely assume that it's likely going to be used to facilitate a move even higher, okay? So just curious what retail traders are doing at this point. Very curious. So let's take a look here. They're very short the euro. Wow, that's nice to see. We like seeing that because we're bullish. Okay. They're very bearish the Aussie. That's nice to see because we are suspecting we're going to see more upside. The USCAD. Let's see. Have they changed their mind yet, or are they still committed to going long? USCAD. Oh my gosh, look at that. 91% long. Okay? And that goes towards, you know, what we always talk about is that when you don't understand, when somebody doesn't understand what is taking place in the markets, and they don't know what time frame to be focusing their attention on. It's very easy to see the USCAD chart right now and say that they're very much, overextended to the downside, right? Price is overextended to the downside, so there's got to be a reversal. If price is so overextended to the downside, then, at some point it's going to have to start heading up. Okay, yeah, overextensions do take place, and then you get pullbacks. But how far is that pullback going to be pushing up towards? So a lot of people are getting in long, right? These numbers keep on continuing. 91% now. This keeps on getting bigger and bigger. So what does that tell you? That tells you that retail traders are getting in long, and as price continues to decline, they keep on adding to their long positions in the hopes that when it bounces up, it'll bounce up and rally far enough for them to be able to close out their positions for some profits. I don't think so. We've been tracking when they've been piling onto their long positions, and it was high up in the charts. Okay, and yes, if you're looking at a 4-hour chart, it looks overextended, but they will look overextended. 4-hour charts will look overextended when we have massive moves taking place on the higher time frames, right? So if you don't know what time frame you should be focusing your attention on, you don't know what overextension really is. Overextension on a 4-hour chart is not overextended on a monthly chart or on a weekly chart. It's nothing. Those moves are nothing. So let's take a look at gold. Let's quickly go there. Okay, so they are still short. Oh my gosh, they are short. Look at that, 75% short on gold. Boy, oh boy, oh boy. What did I tell you? Okay, what did I tell you? It's exactly as we had laid out. Okay, it's the same thing. They were in long here. They got shaken out of those longs. Then they started getting in short here. And then they were long here. And then they got shaked out. And then they were short here. So here they thought it was going to drop. And here they thought it was going to drop. And they just keep on getting it wrong. Keep on getting it wrong. So the vast majority of traders are short gold. We're focused on longs. Vast majority of traders are long USCAD. We just closed a bunch of our short positions and made profit, us and many of the members of the school. And it's just ridiculous. We're getting ready to get in hard euro long. We've already exited some long euro trades for profits. Same thing with some of our members. And retail traders are focused on shorting. I mean, it's just exactly the opposite. It's crazy. Yeah, Jason, damn, they love going against the market. Yeah, and they don't know, why it keeps on acting out that way, why the market keeps on lashing out that way. I know the feeling. I used to feel that way. I used to feel, how is it possible that every time you get into something, it seems to go against? Well, again, you got to blame the education that's out there teaching how to trade. You have to really ask yourself, is this education that's out there meant for you to do well? Well, if the vast majority of traders are constantly losing, the logical answer has to be no, right? That's the logical answer. So, so we're seeing great potential for a move up from here, okay? This is not over. This is not over, this move. Next week, I think we'll probably see a pullback, but more upside is what we're seeing on the chart here. Okay, look at this chart. This is a monthly chart. These are the highs here. Okay, this area here was responsible for putting price up into this area, in the 2000s, 240s, 2040s. So now it comes back. What is this area? This is an area of buying by the institutions. So who in their right mind would ever want to be short when price is sitting in an area that we've confirmed is an area where the institutions are buying? Their focus is on buying. So I mean, it just is not the way to trade. The only time I would ever consider being in short is if The institutions took out their area of demand, period. I mean, why would you want to go short unless you know for a fact that the institutions are not interested in accumulating a long position, right? It just goes against reason. But, first you need to know where these areas of supply and demand are, and then you need to know how the institutions build up momentum on the charts to facilitate bigger moves. So that's what's going on with gold. Okay. Let's take a look at your messages. That's because they don't know the context. Yeah, that's right. They don't know the context of where price is and what it has been doing and why it was doing what it was doing. When you understand those things, then it makes sense. Pound yen, please. Just want to see if my bias is correct. So what is your bias, blue chip? I'm curious. What is your bias on pound yen? What do you think is going to happen? Tell me your bias, and we'll take a look. Well, tell me your bias and then give me a reason for why you are biased that way. That's another thing about trading. You have to build up reasons for why you believe what you believe. If your belief is based on something that you read in the news, then I'm sorry, it's not good enough. If your belief is based on a specific chart pattern, then I'm sorry, that's not good enough. If your belief is that price retraced to a 50 moving average, I'm sorry, but that's not good enough. Okay. If it dropped down to a 38.8 Fibonacci level, I'm sorry, but that's not good enough. You need solid reasons to believe that price is going to head in a certain direction. And if it's based on support and resistance, Fibonacci retracements, moving averages, I mean, you're just going to see what you want to see, all right? You're just going to see what you want to see. If you had this chart and you had absolutely no drawings on it whatsoever, okay? And you had, a moving average and you have retracement lines, okay? And you have, support and resistance and all sorts of stuff. You have all these things on your charts. What do you go by? How do you know that the 38.8 is what you should be buying at? How do you know that it's the 50% of the move that you should be buying at? How do you know it's the trend line? How do you know it's the support? How do you know it's the moving average? Because you back tested that whenever price has a double bottom, that you wait for pull. That won't work consistently. It's crazy. It's crazy. Okay? Because you don't know the context. Last time there was a double bottom, maybe there was an area of demand at that 50% retracement, and you didn't even know that. But you thought the reason why price went up was because it contacted the 50% retracement. But next time you see a double bottom and price comes to a 50% retracement, maybe there is no institutional demand there. And guess what's going to happen? That 50% retracement is not going to work. Then you're going to be like, well, why did it work one time and it didn't work the second time? Well, because you're using these indicators that are not telling you what's really happening with price. They're trying to give you some indication of what could potentially happen, but it's not has nothing to do with reality. Okay, that's the problem. Okay, so would you want your chart to look like that, or would you want your chart to be very specifically laid out with what the banks are doing, the institutional supply and demand? When they remove supply, you know what that means. When they break trends, you know what that means. When they break out of ranging, you know what that means. You put it into a bigger context and you know what it means. I mean, for me, it's just common sense that you'd want to know that. You'd want to know all that information to make good trading decisions. Otherwise, how can you make good trading decisions? Okay, since it broke a lot of supply. Oh, so you're looking at supply and demand too? And now it's sitting on my 4-hour demand. Okay. So pound yen, you want to take a look at. Let's go and jump over to the pound yen and see what's going on. It's sitting in your 4-hour demand zone, you said? Okay. All right, so here's the pound yen. So what I see on this chart is, I see very messy chart. That's what I see. I see price in a range. Okay. So this, to decide what you should do for trading in this situation, it's not the greatest situation. Why? A lot of traders will be like, yeah, but it's sitting in this range. Price goes from down here to up here. So if I can just buy low and then ride the wave, I can make a few pips. Oh, why is that? Because it's done it a few times? Yeah. Do you think maybe price is luring you into a trap? Do you think that's possible? Why do you think it's going up and down like that? Do you think it's going up and down like that because it's trying to recreate a range, a chart pattern, just like your textbooks say? Oh, when you see this, you buy low and you sell high. Do you think that's the reason why? You think the market is so kind that it wants to create these wonderful patterns so that you can make some money buying low and selling high? That's not the reason why it's doing this. The reason why it's doing this is because the institutions are either accumulating a position or offloading a position. So let me ask you, if they're offloading a position, would you want to be going long? Just think about that logically. If they had a position long and they want to offload that position, and that's why they're ranging, would you want to buy it? Do you think that would be a good idea? Probably not, right? Probably not. Because if you were buying, yeah, you might get lucky. But remember what I mentioned before, right? There has to be a pattern created first before regular technical analysts will say, oh, now it looks like there's a pattern here. There's a range, up, down, up, down. This is pretty easy to read. So when the market drops down, I'll just do it again. Listen, these are like walls about to collapse, all right? Remember I told you, I was saying that before? These are like walls. What happens when you take a sledgehammer and you knock on a wall? It cracks, right? The first time you get a little crack like that. The second time you get more cracks. The third time, okay? It might hold if the institutions are offloading a position, okay? It'll likely hold if the institutions are offloading a position. So what happens if price hits demand? It puts a crack. It puts a few more cracks, okay? What do you think is happening when the institutions are offloading a position? What do you think is going to eventually happen? This is going to break through and drop. And then what happens to retail traders? They buy here, they sell up here. They buy low, they sell high. They buy low again. Oops, now it's breaking through. Now what? Now you add to your long position because, oh, now it's overextended because you're comparing this move, okay? You're comparing this move here with all the other ones. You're comparing this and with this. That's the problem. You know, a lot of traders will do that. They'll make that mistake. I know, I've seen it 1,000 times. You see a big move like this and you're like, well, it's overextended. Why is it overextended? Well, if you look at the other moves to the downside, you'll see it's overextended. Well, why are you looking at the moves to the downside? That's the problem. You're comparing that with the moves to the downside. If you understood the context of what was taking place in price, you'd know that that's nothing. That move to the downside is nothing, okay? Let's just take a look at the daily chart. Look at this move here, okay? So you honestly think if this was to come down like this, it'd be overextended? Yeah, on the 4-hour chart, if you're just focused on the 4-hour chart, yeah, you would think it's overextended. But why don't you compare it to the daily chart and tell me if it's overextended, right? That's the move that's going to knock you out. That's the move that's going to take the money from your trading account, is that. And that's the trap, okay? That's the trap. Is because if you can't come to a point where you can figure out what's going to happen in the markets before it happens, you're in trouble. Because if you're waiting for it to show it to you many times and prove it to you many times, it's done, okay? That's the trap. That's the trap. You got to be there before it actually happens. Most traders don't know how to get there before it actually happens. You listen to these professional traders talk on radio shows and podcasts, and what do they say over and over again? You can't know where the market's going to go. I've heard that so many times. You can't predict the market. The market is going to do what it's going to do, and you can't predict it. You can't call the tops. You can't call the bottoms. Man, have I not heard this so many times. You ask our students, do we call tops and bottoms constantly? If you're in the chat room right now, do we call tops and bottoms in our class? Does the Arujo report lay out more often than not the exact tops and the exact bottoms before price reverses? Are we able to locate those situations? And why is it that we're able to locate those situations? Right? Why is it that we can do that? We don't have a crystal ball. So how is it possible that we can do these things? It's possible because when you study the markets and understand what is taking place here, it becomes the same thing over and over again, right? Supply and demand and tracking the supply and demand of the institutions is what leads us to understand what to expect from the markets. It's that simple, you know? Yes, people have told us that you cannot know what the market is going to do beforehand, but that simply is not the truth. It is not the truth, okay? Maybe it's the truth for them. Maybe they believe it and they live their lives that way, but it's not the truth. You can determine what is going to take place in the markets before it happens. In many circumstances, not every single circumstances, like you have to understand there's certain phases that the market go through that, are dependent on what the institutions are doing with price at the moment. Okay, and in those times we don't say, oh, this is exactly what's going to happen. We'd say this is a time where we can't know exactly what's going to happen, but if it does this, then we know it's very likely going to do something else like this, and we'll lay it all out. Okay, if you're understanding this, give me some likes. I appreciate it. We're 18 minutes into this session, so just hit the like button. I'd really appreciate it. That way we get our videos seen by more people, which is what we want to do. We want to spread the word about how the markets actually work and how we can actually start making money instead of being caught, going short the euro and going long the USCAD. We can actually ride these waves and make money instead of having the banks always take the money from us. So the pound yen, I would not be interested in trading the pound yen at this time. Okay, I would not. Okay, the daily chart is broken. You see this upward trend line here? Is it holding anymore? No, it's not. So what's to dictate price moving in a certain direction? If the bank's not holding a trend on this chart, what's to keep this going? What's to keep this going up or down? Nothing. So can you make a decision based on this chart? Not really, not from what I see. Okay, and then we go over to the 4-hour chart. It's ranging. Can you make a trading decision based off of this? Well, sure. If you want to go short up here and go long down here and go short up here and make a couple pips up and down until it goes against you and then you lose everything and then your account goes into the minus, sure. If that's what you want to do, I wouldn't do that. No way. I would much rather short the USCAD and make a nice profit, a nice healthy profit on shorting the USCAD, because it was 95, 96, 97% chance it was going to do what it was going to do. I'd rather be sure, very sure of something, than to be like, well, all I'm sure of is that they're making it go up and down and up and down. Yeah, you're sure of that because you've seen it. It's already been displayed. Now that's the bait. That's the cheese. It's like, here's little cheese. And you're like the little mouse going, are you sure? And you're like staring at the cheese, staring at the cheese, staring at the cheese. You're like, I might as well just go get that cheese since it's there. Then you go get the cheese and then the cat comes. You know, unfortunately, it's like that. You know, you may get a little nibble of the cheese because the cat is just waiting for you to take a big chunk to really commit to that cheese. That mouse first comes up and it just takes a little nibble, and then it takes off. Comes out little nibble, takes off. But then it starts to get like, ooh, its appetite starts growing, and it's like, ooh, that was good cheese. Is that aged cheddar? That tastes like some aged cheddar. Let me get my teeth in that. It comes out and starts to chomp down on it, and then the cat comes down. Oh, this mouse is really committed now. It doesn't see me coming. Boom. So I wouldn't want to, you know, get involved in stuff like that. So pound yen, nah, not for me. Not for me. I don't like it. You know, and one of the things that I would use to make a decision on trading pound yen is, first of all, I'd have to go to the pound US dollar, okay, and say, you know, look at this chart and say, is there anything, you know, that's really screaming at me, showing me price is going to move in a certain direction? Okay. I don't see it. I look at this chart, you know, it's stuck. Remember what I was saying before? Look at the weekly chart. It's stuck. Supply trend line. It can do this. So over the next few weeks, it could just stay in a range. So why would I want to get involved in anything related to the pound? Unless there was another currency that was definitely going to move in a certain direction. Okay, like if the pound was going to be strong, or the yen was going to be strong, then yeah, okay, maybe pound yen I'll trade. So let's go over to the US dollar Japanese yen. Is there anything that's really screaming out saying this is going to move in a certain direction? Okay, so it moved down. Remember we were talking about that? Likely going to move down because of the dollar. Okay, so it's moving down now, but is it guaranteed to continue moving down? Is it really guaranteed? How can we know it's going to go down? Remember what we talked about? What's happening here on the monthly chart? We knew guaranteed it was going to go down here. This is where we knew it was guaranteed to go down, right here. Okay, then it came, now it's hitting this trend line. Now what? It's not guaranteed to do anything. It's guaranteed to be unreliable in its direction. That's what it's guaranteed to be. So do I want to trade the pound that's unreliable and the yen that's unreliable? Do I want to trade the pound yen, since the pound and yen are not showing me any very specific direction that price should be heading in? Not really. Yeah, I wouldn't do it. I wouldn't do it. I'd wait until there's something very strong, some real strong evidence that price was going to do something, and then I'd like to get involved. That's what I would do. All right. Uh, if a pair is messy, move to another pair. Exactly. And if they're all messy, do nothing. Sit on your account, protect your money, like a mother hen sitting on her eggs. Protect it. Make sure you keep it nice and warm. Keep that money nice and warm. And then when the markets are ready and the evidence is there that price is going to do something, then go and make a move. Then invest your money. You know, commit, and then make your returns, and then wait until something else happens. So let's move over to the USCAD and take a look at what's going on. So the USCAD dropped, it hit our target, we locked in profits, right? And so, you know, we have lower targets at the 114s, okay? We have lower targets at the 114s, but does this mean I want to just blindly get in more short positions right now? No, no. I don't want to get in more short positions at this time. I'm going to wait until, you know, price exhausts itself, because I'm very sure that institutions are taking profits too. Okay, this is a nice big drop. All right, and this data that's going to be coming out today, the COT data, it's going to represent this candle here, this big drop. So what do you think the data is going to look like? Maybe some profits taking some profits taken on short positions. Maybe they're adding short. Likely they're adding short, closing longs. Right. The problem is traders who look at the COT report, they're going to look at the data and they're going to say, "Oh man, they're adding massively to their short position." maybe I should get in short. You see? And again, that's part of the trickery. You think it's a coincidence that the data gets released on a Friday, but it represents the Tuesday, their positions on Tuesday. Do you think that's a coincidence? It's not a coincidence. And I'll tell you why it's not, okay? Because if you study all the days of the week, okay, and you study when the institutions make their moves, we have Sunday, Monday, Tuesday, Wednesday, Thursday, Friday, all right? Basically, you study the markets long enough, you'll notice that Sundays are usually not much going on, okay, on average. Not all the time, but on average. Mondays, usually not much going on. Not always, but on average. Tuesday, you get a little bit of action. Wednesdays, you get more action. Thursdays, you get big action. Fridays, just a little bit of action, okay? So you can write off Sunday and Monday on average. Tuesday, you get a little bit of action. So let me ask you, the positions that come out on Friday, if they represent the positions that they held on Tuesday, that has nothing to do with what happened that week, okay? It has to do what happened the previous week. That data represents what happened the previous week, not the latest week. But people continually get this wrong. They look at the data and they think it represents what's happening right now. No, you're a week behind, okay? They've already gone into the bank, opened up the vaults, took the money and left. And now you're thinking, oh, it's a good idea to go into the bank. No, the cops are on their way, okay? You're going to walk into the bank, you're going to get caught. All right? You're late to the game. You're late to the party. It's done. Those positions have already happened, okay? That's why they're not going to give you the positions. They're not going to give you Friday's positions on Friday because they don't want you to know. They want you to be one step behind. All right? But, and many people will be like, oh, well, if it's 1 week behind, then, you know, how am I supposed to use that to make any sense of it? It's okay. It's okay that it's 1 week behind because the banks take a long time to accumulate positions. I mean, they're dealing with trillions of dollars, right? Okay. How much is traded every day? The number changes, 5 trillion, 7 trillion. I hear so many different numbers, but it's a lot. So they're dealing with trillions of dollars. So they can't get in and out of positions very quickly, right? It takes time for them. So I don't care if the data is 5 days late. Big whoop-de-doo. I'm looking at supply and demand. I'm looking at the dynamic of price. I know already with great certainty what price is going to do. I'm just looking for confirmation with the positions. That's all. Sometimes we know where price is going to go, but we can't tell exactly if they're going to be taking profits in those areas or and then dropping price, or if they're, or for instance with this, are they going to be taking profits and then rallying price very strongly, or they're going to be taking profits and then continuing price to the downside. But when you study market dynamics and you study the charts and you look at specific areas on the charts and study, okay, price came down into an area after a large drop, they entered in short. Okay, let me give you an example. Okay, it's always best to see examples because this stuff is just fascinating. I love this stuff because it's just unbelievable. All right, let's say price is up here, okay, and then price drops and then hits an area of demand, and now price is down here. If you study the COT reports, you'll see that up here they were starting to get out of their long positions, taking profits on long positions, and then they're starting to accumulate shorts. And as price drops down towards this other area, they keep accumulating shorts, accumulating. Now, when price gets down to here, they're going to do one of two things, all right? They're either going to start accumulating long positions and closing short positions, or they're going to be focusing on, you know, adding a small amount of long positions, closing short positions in preparation for price to continue even lower. All right. And sometimes we'll look at the charts and we'll see the dynamic in play and we'll say there's a very good chance price is going to continue lower. But the market dynamics is not suggesting anything is high degree of probability. So in those situations, we love to look at the COT data to see, well, we know what it looks like when they're going to continue price lower. We know that because we've studied it on the charts and we've looked at the historical data, and we looked at the two to see, is there any specific pattern that they are doing whenever they continue price lower? And I can tell you that there is. All right, there is. And all throughout my years of studying the COT data, I can't tell you how many times I've had traders come up to me and say, why are you manually looking at the COT data and analyzing it? There's so many indicators you can get, so many websites that have already analyzed the data and they're presenting the data to you. Why would you bother spending countless hours every weekend examining the data manually? Well, because there's no other way to get the information out of it than to do it manually. There's no other way you can absorb this information and learn. If you're going to resort to an indicator, the indicator is going to remove your ability to actually take a look at the data and figure things out on your own. I mean, that's the problem. A lot of people, they just want to put the responsibility on indicators to tell them, now do this, now do that. Well, that doesn't work. I'm sorry, but it just does not work. And I get it. Most people they don't want to spend, 2 whole afternoons on the weekend, sometimes even more than that, studying data. I get it. That's why we do the AUDUSD report. That's why I do that. I commit every single weekend to studying the data, taking what I know to be true about what I've learned about the market in the past and what the institutions do with their positions and how they manipulate, how they get into long positions as price drops, and then they rally price up with those long positions. They close their short positions and they start accumulating short positions again and then continue. I know what that looks like. I've studied it, so I know what to expect when certain things happen on the charts. So that's one of the great benefits of using the CFTC report and the data and understanding how to read it. Because again, people are going to see the data that represents this red candle down here, and they're going to say, "Oop, the banks are getting in short." And guess what they're going to be doing come Monday or come Sunday when the markets open up? Since the banks are going in short, I want to trade like the banks, so I'm going to go in short. No, wrong. Sorry, you got it wrong. Because what's going to happen is they're going to pull it up or pull it up this much. They'll do something to lure you in and then shake you out, and then they'll continue it going lower. So you got to be very careful. You got to be very careful. The COT report is very powerful. The data by the institutions that they release every Friday is extremely powerful, but you have to understand the context of where price is, and you have to understand how the banks manipulate, okay, using the media. All right, big time. So any other charts you want to take a look at, or else we'll start wrapping up, and then I'll prepare for my level 3 session with my members. Thanks, Miguel. So the data released on Friday represents the positions that took place that same week. So the data that's coming out today represents the positions that they held on Tuesday of this week. But like as I was mentioning, Sunday, Monday, Tuesday, there's usually not a lot of trading going on there. Okay, it's the previous week that really holds the moves. So when you have Sunday, Monday, Tuesday, there's not a lot that's taking place in those days. Sometimes yes, but the majority of the times the answer is no. All right. So when they give you the data and the positions on Friday, you have to understand that those moves happened the previous week. That's the way I look at it. Those moves happened in the previous week. So if they're getting in massively short, that's because they were pushing price down. Okay, so don't look at the chart and say, yeah, it moved down and they're adding short, so now it's time to get in short. Don't do that. Sometimes it'll work. Most of the times it doesn't work. All right. All right. We're delayed here again with these likes. How many likes do we have? You guys can see? You guys hitting that like button for me? I would appreciate it. So that's the USCAD. Aussie US dollar. You want to take a look at the Aussie US dollar. This one I'm waiting for something, but it's like not doing anything. Not doing anything. Oh, nice big spike up. Good. It's following gold. You know, what do we know? Gold and Aussie usually are together, right? Usually. So if we're seeing some really good upward structure building on the on gold, here we see that there's massive supply, right? We talked about this on the weekly chart, massive supply. So what did I say? That the idea is wait for supply to be taken out, and then that clears the pathway for a move higher, right? At least to here, because that's the next institutional area of supply. What will happen here? So that's the beauty of understanding market dynamics. A lot of people say, what is market dynamics? What is market dynamics? Market dynamics is understanding how price moves on all the different time frames and understanding the dynamic between each time frame. What happens on the lower time frame always facilitates what happens on the higher time frame, one time frame higher. So what happens on the 4s to facilitate the daily, what happens on the dailies to facilitate on the weekly, and so forth. So it's all about reading what is happening on the higher time frames, working your way down, and knowing what to expect from the lower time frames. Okay. So here we have supply. If this gets taken out, then the next move will be between 78.50s and 80.71s. Okay. That's the next logical move. But then when it gets up here, what does it do? Does it drop? And if it drops, how far does it drop? And if it drops, where does it stop before it starts to head back up? If it starts to head back up. So that's market dynamics. And that is how you get into position trades and swing trades and hold those positions for the longer haul. Okay. Because a lot of people, like we mentioned before, they get into a long position. They're so sure price is going to go up. They get into a long position. It starts going in the direction. And then when it starts going against them, they freak out. Their blood pressure goes up and then they get out of their positions because they can't take the stress of it. Well, understanding market dynamics and understanding what to expect when price reacts from these areas of supply, that is what gives you the confidence to hold a position for a longer period of time. Otherwise, what do you have to base your confidence on, right? Look at the monthly chart. Monthly chart is clear sailing up to here, 86, right? It's clear sailing. All these supply zones were used to facilitate a move to the downside. Once demand is contacted and reversals are to be expected, you think they're going to use supply zones still? No. What do? They take them out. You see, all the way up, all the supply zones removed. What does that tell you? You think if price was going to drop, they would use that supply? Yes, that's exactly what they would do. They would be using that supply to drop price. But they're not doing that. So what does that tell us? Likely price is going to continue higher. Okay. And did we know that price was going to reverse down at that bottom? Yes, we did. But I thought it was impossible to catch the bottoms. Yeah. That's what they told you, right? Right down here. And what was that from? Because of cutting rates, because of what was happening in the world. The world was turning upside down. Everybody was freaking out, and everybody thought this was what was going to happen. Interesting, interesting. So let's do a little bit of an experiment, okay? A little bit of an experiment. When price hit these bottoms, what was it? March 16, 2020. March 16, 2020. March 16, 2020. Let's do something for fun. Okay. Aussie US dollar price. Enter on Google. Because, Google's great for the masses. It's what everybody's looking at. So we want to see what everybody was looking at. Tools, I think. Recent custom range. March 16, we'll put 15, and we'll put to 20. Okay, 2020. Let's look at the news for the Aussie US dollar during the period where price was dropping hard. Let's see what kind of headlines they had. Oh, Aussie rate clears 2008 low ahead of RBA announcement. Aussie huge bearish trend playing out. Huge bearish trend playing out. Ooh. Huge, massive trend playing out. It's going to drop forever. Sell short so the banks can buy it because they have plans to take it from 58 to 77. Huge bearish trend. If you're not in on this, you're missing out. Okay. What else we got? Why are they tossing in some USCADs here if I've typed in Aussie US? Aussie extends recovery as demand for greenback eases. Let's see, crude oil. This is not working very well. They should be only showing Aussie. Aussie dollar won't help economy despite hitting 17-year low. It's not as reliable. It should only be showing me Aussie US dollar. And it's giving me other stuff. Well, anyways, Aussie US dollar bottom falls out under Aussie 0.60 disappears. Wow, that sounds really bad, doesn't it, guys? Does that sound like a currency you want to buy? Yeah, not really, right? Yeah. Do you think there is a chance that maybe, just maybe, there was a chance that somebody understood that this was an area here where the banks were going to be buying? Do you think that there was a chance that they knew that? Maybe? Do you think that when price was hitting this spot right here that we located as demand, do you think they knew that they were going to start buying there when all those news headlines came out? I don't know. Probably. Make up your own mind on that. I know what my answer is. We weren't even looking at the news. We never look at the news. We never ever look at the news. The news is just mumbo jumbo. Okay. We look at the charts and we look at what the charts are doing. And we know if price does certain things that we should expect certain reactions. Why? Because we study the charts. We don't rely on an indicator to tell us. I mean, if you go to an indicator and you're like, can you help me? I don't really know anything. Can you help me? Like, how much respect do you think the market is going to pay you if you go to an indicator for answers? If you don't put the time and effort to determine what is taking place and then follow the storyline of price, the market's not going to give you anything. You don't deserve anything. You don't want to put the time and effort. So why would the market give you anything? It might give you some, dog bones here and there. It might toss you a couple scrap pieces of meat here and there, but it's not interested in giving you what you deserve because what you deserve is nothing. Trading is hard. Yes, it is hard. And anybody that tells you it's easy is a liar. Period. Okay. That's the basic thing. And I know most people don't want to hear that, but hell, it's like you go to someone for advice on how to be healthy, and you're hoping that they can say, "Oh, I got the thing for you. Here's a pill. Just take it. You'll be healthy." And then they tell you, "Well, you got to exercise. You got to stop eating garbage food." And you're like, "Oh, the hard thing. I really have to do the hard thing?" Yeah. And if you don't want to, you'll be the same way for the rest of your life. Don't complain. So if you put in the right habits, the right routines, and you do the right things consistently, you will see results. That's just how it is. All right. Otherwise, you're not going to see the results. Let's take. How about we look at one more before I let you go, and then I'll start preparing for my session with my students. What do you guys think? What do you guys look? Indicators are just a carrot at the end of the stick. Yeah, always leading you into trouble. But sometimes they pay out, it's the casino mentality. If it doesn't pay you out sometimes, then you would just say, oh, this doesn't work, and you'd walk away. So, people's self-esteem is so low that they'll accept winning one time and losing 3 or 4 just for that one time. Okay. That's not good. I don't want that. I want to win 10 times and lose one time. All right. And that one time that I lose, it's not because I counted on somebody telling me to do something or some indicator. It's because my analysis was wrong. And then guess what? I'm going to learn what I did wrong in that analysis and make sure I don't make that mistake again. and it'll just make my trading that much sharper next time, right? I mean, that's how I look at trading. So I think that makes sense. What do you guys want to look at? Quick look at oil. I was looking at oil last night, and it came down and broke that 4-hour trend. What was I saying? Low odds, right? I said you could buy there, but low odds. Why? Because supply, weekly supply is in play. So yeah, over time, do we suspect that the price is going to go higher? Yeah, but with supply in play, we would want that supply to be taken out first before it moves higher. Okay, so that's how that is. So this is out now. There's no trend on the 4-hour. It's no good. It can drop easily, or it could reverse and start heading higher. We don't know. Once it's in supply on a weekly zone, the pressure to the downside can be significant, or it could break. This is not the phase of the market I want to be trading oil. Okay, so we saw USCAD, great potential for a rally, but again, the context, right? They're probably taking profits on short positions. When they're taking profits, they're not accumulating, so they're not building structures to the upside. So any rally up in price is from profit taking. So how far does it go up? I don't know. How long do they take profits for? Right? I'm not sitting next to them to see how much they're going to take profits. I don't know. So could there be a reaction? Yes. Does that means could there be a move down on oil? Yes. How much? No idea. Is it a good time to trade it? Not at all. Not at all. So I would stay away from oil as well. All right. So that's it. We'll cut it short. It's 45 minutes. I think we looked at what's taking place. We have a good idea of what's going on, right? We're prepared for next week. We know what to expect. So keep your eye on what we laid out today and see next week how things play out. There'll be very good trading opportunities to take advantage of. So let's just wait, be calm. Gold longs, good opportunities. Euro longs, good opportunities. Just need the chart signal to present itself. We already got in early, made some nice profits. US CAD shorts, made some nice profits on the shorts. We already closed them. Now we're waiting for some kind of a bounce to the upside, a reaccumulation by the banks of short positions, a restructuring of supply, a restructuring of some momentum to the downside. And when that's there, boom, get back in again and ride the wave and let everybody else get shaken out. What happens to everybody has nothing to do with us. We just keep focused on what we do. Don't look at the news. Don't look at indicators. Don't look at nothing. Just focus on what we do and the money just comes. All right. So enjoy your weekend. I'll be doing the Arujo report. And again, I'll be sending out the video analysis for you to consume over the weekend. And then we'll see you again on Monday. All right. Monday, we have a class. It's already pre-scheduled for 9 a.m. So I'll be doing this live session at 10 a.m. But in the future, starting next month, we'll be doing them on Monday every morning at 9 a.m. as well. All right, ladies and gents. So thank you for your time. Thank you for the likes. If you haven't given me a like, I'd appreciate it if you could do that now. And enjoy your weekend. All the best to you. And we will see you on Monday. Okay?